All right, let's talk about something that's flying completely under the radar but could be absolutely massive. Rumble, yeah, the YouTube alternative that everyone thinks is just another video platform, is about to launch something that could completely change the game. I'm talking about the Rumble wallet dropping in Q3 2025, and this isn't just some random crypto gimmick. This is a full-blown assault on the traditional creator economy that could make other platforms look ancient. Here's what most people don't get about Rumble. While everyone's been dismissing them as that conservative platform, they've been quietly building something that solves real problems for content creators. We're talking about a non-custodial crypto wallet that lets creators get paid directly in Bitcoin and USDT, completely bypassing traditional banking and payment processors. No more waiting for AdSense payments. No more getting demonetized because some algorithm doesn't like your content. No more platform taking 30% cuts. Just direct peer-to-peer payments from your audience to your wallet. The partnership with MoonPay makes it seamless. Creators and viewers can buy, sell, and trade crypto right within the platform. But here's the kicker that's got me really excited. Rumble isn't just building a wallet, they're building an entire financial ecosystem for the creator economy. Think about it. If you're a creator who's been banned or shadow banned on other platforms, Rumble just handed you a completely independent monetization system that no one can shut down. Tether, the company behind USDT, the biggest stablecoin in the world, just dropped $775 million into Rumble. This was announced on December 20th, 2024 and closed on February 7th, 2025. $775 million. Tether bought 103.3 million shares at $7.50 per share, which tells you they see massive upside from current levels. But here's what's really wild about this deal. Tether isn't just a passive investor. They're integrating USDT as a primary payment method in the Rumble wallet. Do you realize what this means? USDT is the backbone of crypto commerce worldwide. It's how people move money across borders, how businesses settle payments, how the entire DeFi ecosystem operates, and now it's becoming the native currency of a major social media platform. This isn't just about creators getting paid in crypto. This is about Rumble becoming a bridge between traditional social media and the crypto economy. Imagine being able to tip your favorite creator in USDT, subscribe to premium content with stablecoins, or even trade digital collectibles and NFTs, all within the same platform where you watch videos. Tether's CEO, Paolo Ardoino, doesn't throw around $750 million lightly. This investment suggests they see Rumble as a key piece of infrastructure for the future financial internet. And honestly, after watching how traditional platforms have treated creators, the demonetizations, the algorithm changes, the arbitrary rule enforcement, having a crypto-native alternative that puts financial control back in creators' hands is exactly what the space needs. Here's something that's making this whole Rumble situation even more interesting from a trading perspective. We've got a perfect storm brewing with the short interest situation. Rumble currently has about 18.26 million shares sold short, which represents 13.23% of the float. That's significant. Anything over 10% starts getting into squeeze territory, but here's where it gets really spicy. The days to cover ratio is sitting at 7.42 days based on average trading volume. That means if shorts want to cover, it would take them over a week at normal trading volumes. Now add in the fact that call option activity has been absolutely exploding lately. Big money is betting on Rumble moving higher, and they're not being subtle about it. You've got this combination of high short interest, increasing call buying, and a bunch of major catalysts coming down the pipeline. The Rumble wallet launch in Q3, the Tether integration gaining momentum, and frankly, any positive news about creator adoption could trigger something big. I've seen this setup before with other stocks, and when it works, it really works. The shorts are betting against a company that just secured nearly $1 billion in strategic investment and is about to launch a product that could fundamentally change how online creators get paid. That seems like a tough position to maintain, especially if Rumble starts showing user growth or revenue acceleration. What makes this even more interesting is that Rumble has legitimate business fundamentals backing up the technical setup. This isn't just meme stock speculation. There's a real business here with real revenue and a clear path to growth through crypto integration. Let's address the elephant in the room that everyone talks about but few people understand properly. Yes, Rumble has become the platform of choice for conservative content creators and political figures, but here's what most people miss. It's about market positioning. Think about it strategically. Traditional social media platforms have basically told half the country they're not welcome. That's not a political statement, that's a market observation. Rumble looked at this massive underserved audience and said, we'll serve them. And now they've got an incredibly loyal, highly engaged user base that other platforms can't reach. But the crypto integration changes the entire game. Instead of being the conservative platform, Rumble is becoming the platform where creators actually control their money. Yeah, that's a much bigger addressable market. Crypto doesn't care about your politics. It cares about financial freedom and censorship resistance. The same reasons people got attracted to Bitcoin are the same reasons creators are getting attracted to Rumble. No central authority can freeze your account. No payment processor can cut you off. No platform can demonetize you on a whim. The timing is actually perfect. We're entering an era where financial sovereignty is becoming more important to more people. The traditional banking system is showing its limitations, platform censorship is increasing, and people are looking for alternatives. Rumble positioned itself as the free speech platform, but now they're evolving into the financial freedom platform, and that's a much more powerful value proposition that goes way beyond political affiliation. Here's something that really caught my attention and shows Rumble management actually gets it. They announced a Bitcoin treasury strategy back in November 2024 and followed through by purchasing $17.1 million worth of Bitcoin in March 2025. This isn't just some publicity stunt. This is putting their money where their mouth is. When a company starts holding Bitcoin on their balance sheet, they're making a statement about the future of money. But what's really smart about Rumble's approach is how it all fits together. They're not just buying Bitcoin as an investment. They're building an entire crypto-native ecosystem. The Bitcoin treasury strategy, the USDT integration, the crypto wallet, the Tether partnership, it's all connected. They're basically saying, we believe the future of content monetization is crypto-based, and we're building that future. This is the same playbook that MicroStrategy used, but Rumble is applying it to social media and the creator economy. Instead of just being a treasury play, Bitcoin becomes part of their actual business model. Creators can get paid in Bitcoin, audiences can tip in Bitcoin, and the platform itself holds Bitcoin. It's this virtuous cycle that reinforces their position in the crypto economy. What I find particularly bullish is that they're doing this before it's obvious to everyone else. Most social media companies are still figuring out basic crypto payments. Rumble is building a comprehensive financial infrastructure that assumes crypto is the default. That kind of forward-thinking positioning usually pays off big when the market catches up to your vision. Looking at the bigger picture, what Rumble is building goes way beyond just another video platform with crypto payments. They're constructing the infrastructure for what social media looks like in a Web3 world. The non-custodial wallet, it's about giving users true ownership of their digital assets and relationships. Think about the implications. Creators control their own wallets, audiences can directly support creators without platform intermediaries, and the entire economic relationship becomes peer-to-peer rather than platform-mediated. This is fundamentally different from how current social media works, where platforms control everything from reach to revenue. So what really excites me about this model is how it flips the incentive structure. Instead of platforms extracting value from creators and audiences, the platform becomes a service provider that facilitates direct economic relationships. Rumble makes money by providing infrastructure, not by controlling and monetizing user data and attention. That's a much more sustainable and creator-friendly model. The timing couldn't be better either. We're seeing increasing concern about platform monopolies, creator rights, and financial censorship. At the same time, crypto infrastructure is finally mature enough to support mainstream adoption. Rumble is positioned right at the intersection of these trends. The Tether partnership gives them access to global liquidity, the MoonPay integration handles the fiat on-ramps, and the Bitcoin treasury strategy aligns their incentives with the broader crypto ecosystem. If they execute well on the wallet launch and can drive creator adoption, Rumble could become the template for how social media platforms operate in a crypto-native world. That's a massive opportunity that goes way beyond their current valuation. Sometimes the companies that seem like they're fighting yesterday's battles are actually building tomorrow's infrastructure. And honestly, after watching how traditional platforms have treated both creators and users, having a viable alternative that puts financial control back where it belongs feels pretty revolutionary.